Every so often an earnings call comes along well, it's just different. It's not just about the numbers. And Tesla's Q4 2025 call? Wow, it was one of those. They basically just told the world they're not really a car company anymore. Welcome to Talk Tickers. We're going to break down this pivotal report because this felt less like an update and more like the start of a whole new story.
All right, let's get right into it. To really get what's happening here, you've got to start with the numbers. And honestly, they were a quarter of contradictions. A really, really confusing picture at first glance.
So yeah, this was a total roller coaster. You look at the GAAP earnings, that's the official by-the-book number, and it was a miss. But then you look at the non-GAAP number, which is what Wall Street really pays attention to, and boom, a solid beat. And revenue? Well, it looked like a beat, but when you peel back the onion, it was actually down from last year. So yeah, contradictory is the word for sure.
Okay, and this is where it gets really interesting. So you've got all this chaotic data, right? Revenue is down 3% year over year. You'd expect the stock to take a hit, but nope, it actually went up in after-hours trading. So that's the big question, the central mystery we've got to unpack here. What on earth is going on?
And the answer, the key to this whole puzzle, lies in this huge radical pivot that management laid out on the call. The message was crystal clear. Tesla is no longer a car company.
I mean, Elon Musk couldn't have been more explicit about this. This wasn't some subtle hint. It was a full-on public declaration. He's ending production of the Model S and the Model X. Think about that. Those are the cars that basically built the brand's luxury image. Killing them off? That's him screaming from the rooftops that they are done with the old way of doing things and going all in on an autonomous future.
And look, this isn't just talk. They backed it up with 3 absolutely massive moves. First, they're killing off those legacy EVs to literally make physical space for building the Optimus robot. Second, they're dropping a cool $2 billion into XAI. And third, and this is a big one, they announced the CapEx plan that's basically a shockwave through the company. There is no going back from this. And this right here just shows you the sheer scale of this bet. We're talking about a capital expenditure guide of over $20 billion for 2026. Just to put that into perspective, that is more than double what they're spending in 2025. It is a massive, all-in, bet the company kind of investment on this new vision.
So what's the takeaway here? The crucial point is that Tesla is basically telling investors, you need to completely change how you value us. It's kind of like how Google went from being just a search engine to this sprawling AI giant. That's the exact same kind of re-rating Tesla is demanding. Forget car company margins. Start thinking about us as a physical AI company.
Okay, but let's be real. A vision this huge, this epic, it's not going to be a walk in the park. So now we got to talk about the risks and the realities. The Q&A section of the call really brought these to light, and it paints a much more complicated picture.
Yeah, so the call wasn't just Elon painting this grand vision. The analysts, and rightly so, jumped on the one question that's hanging over this entire thing. With this insane cash burn and a total strategic overhaul, can they actually execute? Can they pull this off?
And the risks are, well, they're substantial. You've got chip supply. Musk himself said that could be the biggest roadblock in a few years. Then you've got the cash burn. How do you fund a $20 billion plan? You've got the classic manufacturing S-curve problem, which is going to be even harder for something totally new like Optimus. And of course, the big one, getting regulators to actually approve a fleet of robotaxis. None of this is easy. So, you've got this epic vision on one hand and these massive, very real risks on the other. So where do we land? What's our take on all this for the next call? Here's the official Talk Kickers thesis. All right, so here it is. We are initiating with an outperform rating. And our thesis is actually pretty simple. We believe the market is going to keep doing exactly what it just did after this earnings call. It's going to keep buying into the long-term AI story, and it's going to completely look past the shaky near-term fundamentals of the car business.
Look, the bull case for Tesla now comes down to one single trade-off. You, as an investor, have to be willing to ignore all the near-term headwinds, and they are significant, right? We're talking weak EV demand, margin pressure, a massive cash burn. You have to look past all that and instead price in the huge long-term potential of the AI stuff, like robotaxis actually hitting the streets or Optimus taking its first real steps.
So how do you play this? For our outrageous but plausible trade idea, we're looking at something like long-dated call options. The best way to think about it is like buying a lottery ticket on this huge vision. But it's a lottery ticket where, the odds might actually be pretty good if even parts of this AI dream start to become reality over the next year or two.
The whole idea here is to structure a trade that is laser-focused on the only thing the market seems to care about right now. It lets you capture all that upside, that AI optionality, if the Robotaxi or Optimus projects hit some real milestones. But at the same time, it puts a hard cap on your risk, protecting you from that massive cash burn and all the short-term volatility. It really isolates the thesis perfectly.
Okay, before we wrap this up, just one final and really important point. Look, this has been our analysis of the quarter. It's for informational purposes only. This is not financial advice.